All right, folks. So yeah, really neat little webinar today. It's just basically we're going to be taking a look at short-term care plans and kind of comparing them to how hybrids would shake out against a short-term care plan, a life and long-term care hybrid plan. That's what I'm talking about. So a lot of times we do these, we compare products and things, and we give you a lot of raw numbers. It's a lot of, my job on a given basis here at GoldenCare is to compare and contrast these different extended care plans, whether it be a traditional long-term care or a hybrid or a short-term care. And between the carriers and plans, it seems like we're always throwing numbers around. So this particular webinar more or less takes it to the actual claims and the actual real life examples. So I think it does a really good job of just kind of laying out how claims are paid and how things really work out. And so with that, first of all, I just want to talk about GoldenCare. There's a lot, GoldenCare has a lot to offer. Just looking at the bullet points here. Okay, I'm in presentation mode. Remember this too. So our perfect portfolio of products are superior support, our sales training on our GoldenCare agent website, as you see here on the right. All kinds of tools on there, marketing toolbox and the Instant Pivot underwriting tool, underwriting concierge service, decline placement program, discounted E&O, CSG, Strategision quoting tools. All this is available on goldencareagent.com. Of course, just call us here at 800-842-7799 or email the marketing at GoldenCare USA inbox, and we'll help you out with any of these tools. All you really have to do is be licensed with one of these companies. So, we'd like to tell people is this. First of all, for today, don't worry about taking a bunch of notes. You're going to get a copy of this presentation. You have to leave early or what have you. We will be sending out a copy of it to you. And we tell everyone in these webinars, look, we have so many great tools, so many things to help agents sell more. But it all starts with you. We have to have at least one contract with all the carriers and products we have. Surely we can find one product to get you on board. Then we give you access to all of our tools. When you go to GoldenCare Agent, you'll have access to all of some of the tools are separated for her contracted agents. Some of you can just go on to GoldenCare Agent and look at some stuff. But so we always encourage people, it all starts with the agent. So go ahead and get yourself contracted. So after today's webinar or any other prospects you're into, you're ready to go. Okay, so my name is Jeff Clark. I'm a regional director here with GoldenCare. I've been here 28 years, almost 29. So I guess I've been around for quite a while. I've personally written about 600-700 long-term care policies, probably a couple dozen short-term care. I don't really sell as much in the field anymore. So I guess I've been around a while. GoldenCare, of course, being in the industry and being around since 1974, we've designed several large companies, or products for large companies like Transamerica, Mutual Omaha. In the OmniFlex we're doing, this is one we put together with Manhattan Life. So without that, let me go ahead and move on. Okay, so the industry in general has been shifting. The long-term care markets, long-term care carriers have struggled. There used to be 50 companies offering long-term care 15 short years ago. Now we're down to 3. And actually CareScout with Gemworth just came back in, but so we've got 4 options out there. Now the short-term care arena now has 6 options and probably more coming. And so long-term care was very hard on people. The premiums were very expensive. Claims were hard on the carriers. You had rate increases. Premiums got to be so high and unattainable that it got to be really tough. And so really the advent of short-term care plans has really filled that void and has really saved this industry. So with that, let's go take a look at how short-term care plays out. So to do this today, we're going to go through a story. Again, we're always talking numbers, and there'll be numbers in here as well, of course. But we're trying to put the face with the numbers and the actual plans. So and again, this isn't a real long webinar. So if you folks were hoping to be on here for an hour, it's probably a little disappointing. I think we got about 20 minutes here to tell this story. But of course, I'll open up to questions. If you want to type some questions in there, I'll address those at the end. But okay, let's take a look at this. So here's 3 lifelong friends: Cindy, Betty, and Nancy. They're inseparable. They do everything together. Okay. So these 3 ladies, one applies for traditional long-term care, one applies for a life and long-term care hybrid, one applies for the OmniFlex short-term care, and they go ahead and decide to add a life policy, the $200K death benefit with that, because they're worried about that old use it or lose it fear both Betty and Nancy are troubled with the fact of paying lots of long-term care premiums in over a long period of time, then dying in their sleep and really getting nothing for their benefits. So they like the idea of maybe having a death benefit tied into this, saying, and that's the whole premise of the hybrid. This is why people buy them. They worry about this, use it or lose it. And so for quite some time, GoldenCare has been kind of encouraging agents that, unless a client has an annuity that's, a 10-year-old annuity with no surrender fees or life insurance, and you're going to do an IRA, a rollover of some kind, 1035 exchange, or if you're going to move money into some of these hybrids, they make more sense. But if you're just purely trying to solve a long-term care issue, which these three ladies are, there might be a better way to do that if you're worried about use it or lose it. And that's this example on the right with, again, just go ahead and adding a death benefit to the long-term care premium, or the short-term care premium. So if you look at the totals here, Cindy unfortunately was declined. Her premium was $32.94. Again, this is for similar coverage, 6,000 day a month benefit, $250,000 pool of money. Okay, so her premium $3,200. Now Betty's, this is, you could probably recognize this with Nationwide, but this is a $6,000 a month benefit and a $288,000 pool. That gets you a guaranteed death benefit of $144K and a guaranteed minimum benefit of $28,000 in case you use up your benefits in long-term care claims. So the premium, that's $63.20. Over here, we did a full-blown OmniFlex short-term care plan, so it's a $252,000 pot of money. Now, of course, that's going to be a little higher monthly benefit because that starts at $12,000 a month. But okay, so the annual premium on that is $1,862. Then we did a $200,000 death benefit individual or indexed universal life. The premium on that was $32.42. So our total premium now is $51.04. So that's what three ladies applied for. All right. So what happens again? Decline for Cindy. Oh, hey. Oh, yep. Okay. So she was declined, but let me just show you the numbers. Okay, so here's where we get the 63.20 and the 51.40. I like to kind of put the actual snapshots of quotes in here. So this is the short-term care OmniFlex for the 61-year-old Iowa, 1862. And here we have the Nationwide plan, 63.20. It's got the 144 guaranteed death benefit, the pool of 288 guaranteed minimum death benefit of 28.79. And here's the IUL I use. I just use Mutual Omaha for this. I'm sure you guys have a life company, or if you don't, GoldenCare has several companies that we can help you get a universal life contract of some kind. I just use Mutual and 10. It's not maybe the most competitive, but so 32.42. So that's where I get these numbers from. Matter of fact, let's just go back and yeah, that's where those come from. The 63.20. And the 1862, 1342 for a total of 5204. Okay, just to make sure we're checking our oil here. So, all right, both of them have got this policy. It's in force. Granted, Betty's a little jealous because she's paying $1,100 more annually than Nancy is. And there's some other things that as we'll go through this, that kind of point to how the OmniFlex scheme can be a very helpful extended care option. So again, it's $1,100 less. If you add in the prescription drug reimbursement that's in OmniFlex or short-term care, you take another $300 off that premium. So really, it's $1,400 more expensive to have this hybrid. Okay, so let's take a look at what happens to these two as we go through life. All right, so 7 years later, they both had the exact same, darn Christmas lights, right? They're putting the darn Christmas lights up around the Christmas tree and have a little fall, and they fracture their leg. Both Betty and Nancy, same day, same exact age. Okay. So what happens? Well, with a hybrid, remember, that has a long-term care benefit that's a typical long-term care trigger, which has a 90-day certification period, meaning for you to trigger a long-term care or a life long-term care hybrid policy, the care that you need from a nurse, again, if you're having some nurses come to the house, the care has to be identified. You have to have a 2 out of 6 ADL deficiency, and that 2 out of 6 ADL deficiency has to be for a period of 90 days or longer. So in this situation, OmniFlex, she's going to be laid up for a couple months with this broken leg. Okay, so she gets $300 a day for 30 days. So that's $9,000 the first month. Then she's better. She doesn't need a nurse come out anymore. But now her daughter's going to come out and help out for another month. So now she wants to just take the fast 50 or the cash option. So she's just going to take the $4,500 cash for that second month. So these 2 days, or these 2 months that she needed care, her OmniFlex paid her out $13,500. Betty didn't get any benefit from hers because, again, she didn't hit the 90-day trigger. Now, Nancy's policy is going to restore after 180 days. So, great. Nancy got some help out of her extended care plan. All right. Now, 8 years later, we're going to have double knee replacement. They both decide they're just going to do it at the same time. They'll be laid up for a while. So how does this work? Again, on the nationwide, or on the hybrid, life and long-term care hybrid, she's not going to hit her 90-day trigger. People are better from knee replacements or hip replacements in 2 to 3 months. So it's not going to be a 90 days or longer situation. So again, as she goes through this knee replacement, she's not going to get any help from the policy. Over here with with Nancy, well, Nancy's going to get that $300 a day, and she's for 60 days for 2 months worth, with her physical therapy, home health care aids, etc. So this home care claim, she got paid a total of $18,000 for all the help she received at home. Then, of course, her policy restores back to full after 180 days. All right. So again, I think Betty's probably a little bit not crazy about the fact that she's had this coverage for now, I guess she's had it for 15 years and it still hasn't paid her anything. But she still has that death benefit, remember, so maybe it's not a complete loss. All right. So now, 10 years later, 8 years later, whatever it was there, now they have a mid-level stroke. Okay, and this is kind of a bad one where she's going to need some help at home for a while. Okay, so this time, of course, because she's had a 2 out of 6 ADL deficiency from this stroke, she does hit her triggers. And so when she's at home for a year, this hybrid policy paid her $6,000 a month for all 12 months cash. So she received a total of $72,000. Now over here in OmniFlex, same thing. She had a mid-level stroke. So remember, short-term care pays $9,000 a month cash. So over that same 12-month period, her short-term care policy paid out $108,000. So after 1 year at home, she's not out of the woods. She's not getting better. Her family has made the decision now that we're probably going to have to put them in a facility, in assisted living. Okay. So at this point, and this is scenario 1. I ran 2 scenarios on this because, what if it's a longer claim type thing? Okay. So scenario 1 is she received care at home for a year, and now she needs to go to an assisted living facility. She spends a year there, and then she passes away. So now if you look at what her hybrid policy did, it paid her $72,000 plus her guaranteed minimum benefit. And actually, our policy, because the previous slide, remember, she's gotten the first $72,000 from her nationwide. So now she gets another $72,000. So she gets a total of $144,000 plus the $28,000. So her total here is $172,800 paid out. Over here, again, I apologize for that number here. I'm just going to do this right now while I'm in here. Oh, that's next slide. It won't let me. Oh, I'm in presentation mode. We'll do this later. I'll come back to it. Okay. I have a summary here that I'll clean these numbers up here. But over here, remember, she got 12 months for the first 12 months at home, $144,000 additional, her death benefit of $200,000, a total payout of $344,000. So this is, again, die after 1 year. So over here, now here we have a longer claim. So after that 1 year in the home care and 1 year in the other one, she dies after 3 years. So now this hybrid policy was able to pay out its tighter benefit of $288,000. So a total of $216,000. Now, of course, she's wiped up the death benefit, so she gets a total of $28,800. So in this claim, it's going to pay her a total of $244,800. Over here, we pay out the $144,000. And then remember, when she dies, we have a $200,000 death benefit. We didn't use that up. It's not an either or situation over here. Remember with Betty, If she uses her long-term care benefit, she doesn't get that $144,000 death benefit anymore. It gets reduced down to $28,800. So her total payback on this longer claim is $244. Nancy gets $344. So whether it's going to be a long claim or a short claim, you're going to find that short-term care is going to pay out more benefit. So let's kind of review this. So scenario number one. We'll go through this again. Remember the first claim, the fracture, nothing paid over here, but $13,500 on short-term care. The next claim, double knee replacement, nothing paid on this on the hybrid, but $18,000 paid over here. Now on that stroke, the 1 year home care claim, $72,000 paid out, $108,000 paid out on the short-term care. And then remember 1 year in the nursing home before, or the assisted living before we die. So you paid out an additional $72,000. Here you got an additional $144,000. So when we add them all up, you have a total of $172,800 in total benefits paid. As opposed over here, we got a total of $483,500 total benefits paid out. And remember, a premium savings of $30,000. Because up here, remember the premium at $6,000 versus $5,000 over the course of her lifetime. She would have paid in $170,640. Nancy would have only paid in $140,000. With the RX discount, she would have only paid in $132,000. And so at the end of the day here, she saves $30,000 in premium and gets almost 3 times the benefit paid out of it. Much better way to go for Nancy. Again, Betty's a little jealous. Okay. Now the longer claim. Now we were able to pay out the total here, right? We were able to pay out the $2,000 or $6,000 a month in the hybrid for that 12 months at home. And then we were able to pay out another couple of years here at the assisted living facility. So we paid out all her benefit. So now her total is at $316,800. But remember over here, this benefit did run out after the 1 year at home and the 1 year in the facility. Granted, the amounts were higher. So she got all of her benefit out of both policies, fully paid out over a 3-year period. So both of them got maxed out. The Nationwide paid $316. Her policy, the short-term care option with a life policy, paid $483. Again, for a premium savings now, because we played a couple more years of premiums, because there are a couple more years at that assistant, $32,000 less in premiums, and for a lot more benefit. So again, whether you have a claim, a knee replacement, a hip replacement, what short-term care does for you is it covers those short things that long-term care can't touch. Knee replacements, accidents, fractures, valve replacements where you end up needing rehab at a facility. Situations where you get admitted to the hospital and maybe they deem you observation, not inpatient, so now you don't get those 20 days of rehab. All these things that come up. Short-term care has that ability to help all the short ones, the recoveries from hospital stays, and then it has the legs to stretch out and pay a $250,000 over a 1 to 2 year period. So it takes care of those catastrophic claims as well. It's kind of the best of both worlds. And so now, granted, you can buy a lot more hybrid. You could buy and you could spend, I don't know, $12,000 on a premium for that, get a lot more benefit. We do know that most claims, again, are shorter in nature. Matter of fact, I think, yeah. So here's, if you look what actually happens in long-term care claims, here's your averages: nursing facility, assisted living facility, and home care. So the highest insurers average, again, this is just average claims paid out over all the long-term care data we've seen over the last 20 years. So most of these claims kind of range between 50 and 120,000. So I don't know that we really need a lot of times the big robust benefits, the unlimited or the 5-year, $250,000 or $500,000 pots of money, or some of the big long-term care plans you can write. Now, if your people are independently wealthy, your clients, and they can afford a $20,000 or $15,000 premium, then maybe that's the way you look. But a lot of clients are struggling with the affordability of doing some type of, they know they have to have some type of extended care plan. The stats tell us that 90% of people want to do something with their extended care. They're just not sure what. This gives them a much more attainable and much more affordable option than that. What else we got here? Oh, rate increases. You know, sometimes people say, yeah, but what if the short-term care premium goes up? Well, first of all, short-term care premiums are, you know, they're only a 1-year risk. They're not really a risk for that insurance company. They're not selling a 5-year benefit or unlimited benefit with 5% compound working against them, where the claims can get over $1 million. These are $250,000 pots of money. But even with that, if you look at the long-term care industry, with the claims data they have now, using lower interest rates, they've got a lot of statistical data. They know what the persistencies on these things are now. They didn't know how they were pricing in 20 years. They kind of know what they're doing now. The long-term care rates by themselves are extremely safe. Short-term care, I just can't see any issue with those ever. So, you know, for most of your claims, 90% of claims aren't going to exceed 2 years, and then 95% don't exceed 3 years. So really, a bulk of your care is going to happen in that first 1 or 2 years. So this is why the short-term care makes so much sense. Okay, and I did talk about this, the 90-day. Yep, and this is such a big thing. That's why Nancy was able to get the Christmas tree, fall, and the knee replacement covered, because there is no 90-day certification with short-term care. So you're covering, like I mentioned, I guess I've already kind of covered this, but you're getting all that short-term help, recovering from a hospital stay, valve replacement, knee replacement, fall, accident, you know, what have you. And so that's really the key here, is being able to, it's the best of both worlds. And so this was story time. Again, if we just look at the numbers and how claims work out, it's a real compelling argument. Now, having said this, you know, GoldenCare is not against long-term care or hybrids. We sell quite a few of them. I guess it's just a matter of looking at when claim time happens, we're really trying to help out that client, help them get some care when they need it. And so what today's thing is just more or less pointing out is that we do believe that that short-term care plan deserves a seat at the big boys table with the hybrids and the long-term care. I think when you're talking with your clients, and please call GoldenCare, we'll help you and tell you when the right time is or how to put together. We can help you find a life policy to go along with a long-term care policy if you want to do it that way. But we'll help you kind of navigate this. And sometimes it might be a better deal if the person has some money sitting around, they don't want to roll it from an annuity or from life into this new life contract with Nationwide. So I guess the point I'm making is that there is never any one right answer for extended care to solve the extended care issue. There are lots of tools in our toolbox, and GoldenCare is here to kind of help you navigate those. But I hope what today was more of kind of an eye-opener, that this OmniFlex is quite a beast as far as in the short-term care. There are 6 short-term care plans. OmniFlex is the best with a bullet. Aetna recently kind of revamped theirs to kind of get a little closer. But so this short-term care option has become such a strong thing in this industry. So if you're not looking at it yet, I encourage you to do that. Go ahead and get contracted and add this to your repertoire. I think you'll find that you'll be able to help a lot of folks. It's a lot more affordable, and it's a lot more attainable via underwriting. So you'll be able to help more folks. Okay, call us if you need us. Work with our knowledgeable team here. There's myself up there. We got Manny, we got Morgan as co-directors here. We've got Renee Stutz, Corey Fountain, and Lynn Voss, and our additional marketing support. So the biggest thing is 800-842-7799. Call us. Go to goldencareagent.com. We can't help you unless you give us a shout, and we can't help you unless you get contracted. So let me see if there's any questions here. I know it's pretty short and sweet. Okay. I did any questions, which means I blew through that so quick that people are still scrubbing their heads. But folks, again, we'll send you a copy of this. And so I hope you enjoyed this. I hope this was kind of an eye-opening to you. The fact of the matter is that there are a lot of options out there. And we do really feel that the short-term care is a darn strong one. And sometimes if you're going up against a hybrid, sometimes maybe just not doing a hybrid, but buying a standalone life might be a way to save a lot of premium and get them both benefits guaranteed. If the use it or lose it becomes a real issue for folks, which is a real thing out there. So anyways, folks, I'll end with that. I want to thank you guys for coming on board. We do appreciate having you join us. And remember, call us at 800-842-7799 or visit us at goldencareagent.com. Thanks a lot, everybody.
GoldenCare is always here to serve you with new tools, new products, new ideas, and new innovations, and always the best support in the business to help you succeed. So give us a call at 800-842-7799 and check out our website at www.goldencareagent.com.